Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, it is very clear that the market is in a strong uptrend. It has been creating a series of monthly higher highs and higher lows, fueled by strong institutional buying. And we will be speaking about institutional buying in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market is in a strong uptrend, institutions are buying, and all this rejection to the upside and developing of this uptrend is coming as a rejection away from a strong historical structured zone, because all this level here, it was acting as resistance for many years. Every time the market tested its zone, it immediately rejected it to the downside. And what we are seeing right now is that the market has rejected its zone to the upside after breaking it. Then we had the retest and a huge uptrend got developed after this break and retest of this strong historical structured zone. So here in the monthly, everything seems quite bullish. Let's drop down on the weekly time frame and see what we have. Now on the weekly, the price action is very clear as well. We had this strong uptrend, then the market printed this, let's say in this case you could call it a triangle formation, you could call it a wedge. In the end is the exact same concept. You have a situation in which the market is consolidating and printing lower highs and higher lows at the exact same time. And when you see something like this, so an impulse, then the market creates a consolidation in the form of a triangle formation or wedge, then the next leg is usually the breakout to the upside. And I'm sure you have seen this pattern over and over again. And that is exactly what the market did here. We had a huge breakout to the upside. And so far, the market has printed an uptrend also here on the weekly time frame. We have seen, in fact, the creation of all these weekly higher highs and higher lows. Now, since the last move was the creation of this impulse and correction, the next logical step would be a new weekly higher high, because we had higher lows printed and we had a new higher low printed just now. The next logical step would be a new potential weekly higher high if this uptrend is to continue. Dropping down on the daily time frame, what do we see? Now here in the daily, I did speak about gold just a few days ago. I spoke about it when the market was around this level, testing a very important zone, and I explained all the reasons for which I was expecting this rejection to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. But before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing precisely on gold. Now, what we can see here is that with the last reports, net positions first got decreased, but now they're getting increased once again, showing how institutions are once again moving back to the bullish side for this market. So they have been essentially moving back to the bullish side as the market was testing this level. So it is no surprise that the market has rejected to the upside. We can see how if we look at the long term, we're currently sitting with 238,000 longs from an institutional perspective on gold, compared to only 74,000 shorts. So essentially, we have way more longs than shorts from an institutional perspective on gold. So the uptrend is pretty much expected, with institutions aggressively positioned to the bullish side. And unless we will see a strong shorting. So shorts once again being increased, which we are not seeing right now. Right now we went from 89K shorts down to 74K shorts, and longs again slightly getting increased from 237K to 238K. So clearly the trend from an institutional perspective is still positioned to the bullish side. So let's keep that in mind. Until that will change, institutions seem to be bullish. So let's move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, at the moment, everything looks quite bullish. We just had a breakout above a quite important zone. This level here is previous daily resistance from which this move to the downside was created, which is now turned support here. Now, if the market will successfully manage to break it to the upside and retest it, this previous resistance turn support is an important level at which institutions could be adding even more longs, potentially increasing the probabilities of a rejection to the upside away from the zone. So if we will see the break and retest, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COD data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level. That definitely wouldn't surprise me. All this free education and analysis that you see me share on YouTube is actually just the tip of the iceberg. If you want to learn more, I really suggest that you head over to the website linked in description, and you will be brought to my website here. I really put together the best trading program on the planet. You can gain access to all my courses from the really basics of charting to the more advanced topics like building portfolios of automated strategies using the MQL programming languages, building portfolios of strategies, and much, much more. You have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one mentoring directly with me, the COT data software, which often you see me use in my free analysis. And this is our all-in-one program. So you gain access to everything immediately. You gain access to all my EAs. So essentially you have access to my strategies, which you can then personalize to your own preferences. You gain access to the trading show. And here you basically can see the presentation of each and every one of my EAs. So each and every one of my strategies, which you will have access to. You gain access to the trading show, which is essentially a live stream of all trades as they're happening on my account. So opened, closed, managed, everything in real time. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign up process. So I really suggest that you go and check it out. The link is in the description, and I will see you in it. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.